Todd Rosenbluth, last summer, Fed Chair Janet Yellen said she was worried about biotech valuations. The stocks are up over 40% since then. Are they overpriced now?
We don't think so. We at S&P Capital IQ, we still have a lot of strong buy recommendations on biotechnology companies. We think that the larger cap companies are still trading at a discounted PE multiple to the broader market and to the healthcare sector, and they have stronger catalysts. There's a lot of good stocks still out there, we think.
Let's talk about the biotech ETFs, the IBB, which is the iShares ETF. That's up over 20% so far this year. Is that the best one in your opinion?
We think so, yes. So it's focused on the larger cap biotechnology companies, the Gileads, the Celgenes, the Biogens. We happen to like those stocks from a valuation perspective. Yes, they're a little bit riskier than the broader market, but they're less risky than other biotechnology companies. It's diversified across some of the larger cap companies, and it's quite liquid. You know, trades relatively frequently and has a tight bid-ask spread in our opinion.
But what about the XBI? This is outperforming the IBB. This is the SPDR version.
Right, so SPDR S&P Biotech ETF is even more diversified. So it has a lot more small, mid, and large cap companies. It's equally weighted, so it spreads that risk around, but it's more concentrated in some of the less proven small cap companies where, of course, there's a boom potential, but a greater bust potential and more volatility. And so as we think the market could experience more volatility in the second half of the year, we think that this is perhaps a little bit more risky than investors may be comfortable taking on.
And biotech, of course, is a subset of healthcare, and healthcare has done great since the financial crisis. It's beaten the S&P in, I think, the last 5 years. What about owning the select sector SPDR, which is the XLV, or the Vanguard VHT? Is this a much more conservative way to play it overall?
Yeah, so both of these ETFs, the XLV and Vanguard's product, biotechnology is the second largest sub-industry, around 20% of the assets in each of them. But they have more exposure towards the larger cap pharmaceutical companies like Johnson & Johnson and Merck. Those companies, of course, can benefit from some of the trends that's in biotech, but they're more safe. So less risky, more defensive way of doing it, stronger balance sheets. We think you can get exposure to biotech through these diversified sector ETFs.
All right, thanks a lot, Todd.
Thanks, Greg.
And thank you for watching The Street.